All right, Reema, thanks for that. Well, we also have Mayuresh Joshi who joins us now to talk about individual stocks. We have been in conversation with Sudarshan Sukhani. Mayuresh, hi, welcome to the show. Well, one stock you've picked out for us is Ashok Leyland. That one, I was taking a look at the chart. It's actually resumed its uptrend quite well. And it's moved from 80 now almost to the 95 mark. What's the upside looking like in the near term?
Afternoon, Sonia. I think clearly if you look at the quarterly numbers, I think the numbers have been extremely encouraging, and there might be arguments in favor saying that the pre-emission norms, there might be pre-buying happening on that one. But again, clearly I think if you look at it structurally, the MHCV segment is performing exceedingly well over the past few quarters. Our own take is that Ashok Leyland's MHCV volume should go at a CAGR of 20%. And if you're talking about the industry in general, I think the industry is expected to perform exceedingly well. Again, I think LCV is the only weak link, probably an entire chain of scheme things, but clearly I think Ashok Leyland should benefit with increase in volumes. And again, I think the discounting levels for the industry as a whole at 2.1 lakh per vehicle, I think that is expected to come down, and clearly the benefits of operating leverage with volumes going up should start playing out on the balance sheet. If you look at the capex plans for Ashok Leyland, 500 crores expected and earmarked, which clearly means that with increasing operating leverage, the capex should rightfully have the return ratios for Ashok Leyland in the right space. So again, clearly I think we're expecting EBITDA margins to expand to 11% by 517, and even on the current valuation it is getting valued at 12 times EV/EBITDA. So clearly I think Ashok Leyland can be a key beneficiary in the entire cycle, because 80% of its volumes come in from MHCV, and again the excise free duty plant from Pantnagar, if volumes are added from that, I think it will incrementally add to the margin. So I think we remain optimistic on the stock with a target of 104.
Okay, Mayuresh, hi, good afternoon. TVS Sri Chakra, what's the story here?
Afternoon, Anuj. I think clearly if you look at the tire industry structurally, I think oligopolistic kind of play where I think 4 or 5 players are dominating the pricing. And again, if you look at the fall in raw material prices, both rubber prices and crude oil derivatives, we clearly believe that the EBITDA margins that TVS Sri Chakra had posted in the quarter gone back to 16.5%. I think it should get sustained in that 15 to 16% mark over the next 2 years. Having said that, I think it's a market leader in the two-wheeler OEM market, and in the replacement market, it is trying to gain market share. Its recent tie-up with Michelin for outsourcing of tires and the capacity at 2.3 lakh units per month, that is incrementally going to add to the valuations for TVS Sri Chakra. And again, I think exports as a total component of a top line is at 13%. So any increase thereof incrementally adds to the bottom line and the top line as well. So clearly, I think our own take in terms of financials is the top line expected to grow at 11.5, 11.8% over the next 2 years. Margins expected between 15 and 16%. And the bottom line growth should be stupendous as well. So clearly, I think stock at 10.6, 10.7 times FY17 looks very attractively placed. And again, the margin benefits should start accruing and keep on accruing at least for the next 2 quarters till crude and rubber stays in the range of around 130 to 135 as per our expectations. So target of 3 to 10 Anuj on the stock over the next 12 months.
All right, Mayuresh, Sudarshan, just stay on. Now, we're going to talk about one stock that has given you 75% returns this year. The stock I'm talking about is SpiceJet. It's at 30 rupees, but it's had a great run in this year. Shireen Bhan is in conversation with Ajay Singh, the chairman of SpiceJet. So let's cut across and listen in. Shireen, over to you. Hi, welcome back. Less than 10 minutes to go before the markets close, and we have our panel of experts to tell us what you should be doing in the last 10-15 minutes. Before that, Vishal Malkan also joins in to tell you what to buy or sell now for a reverse trade tomorrow. Vishal, over to you.
Yeah, I'll go with 2 buy calls for today. The first one would be Tata Chemicals, which is holding about that important resistance of 400 since many trading sessions. So I'll go with a buy with a stop of 404 for targets of 420. And the second one would be Glenmark Pharma. Just shown good momentum today, and it looks like continuing tomorrow. With a stop loss of 1020, I'll go with a buy for targets of around 1070 for tomorrow.
All right, Vishal, thanks a lot for those trading ideas. But really, the big question now is, after Infosys, what should you do with TCS? That really would be the stock to focus on, because Infosys, clearly, if you had gone long, you would have burnt your fingers. The stock is down about 4%. The stock did open higher though, so that was interesting. From the high point, of course, the stock is down almost 8 to 10%. But TCS is now not going into the earnings with elevated expectations. Actually, the stock is down 1.5%. Here's Reema on what we can expect from TCS.
Hi, thanks so much for that. You know, the company performance has faltered in the last 4 quarters, which is why it's been such an underperformer. So if you track the performance on a YTD basis, Infosys has only seen a rally of 1.5%, as opposed to Infosys, which is up 15% despite today's correction. And even the CNX IT index is up 4%. This is a seasonally strong quarter, so expectations are fairly decent. So we're working with a dollar revenue growth of 3.6% from TCS at $4,181 million. But this 3.6% would compare with the 6% that Infosys delivered today. Apart from that, margins are seen higher by 70 basis points to come in at 27% on the back of a 2.5% rupee depreciation and the absence of wage hike. That flows through into the profitability, so profits too higher by close to about 6 to 7%. The key things to watch: there are three headwinds which have been identified by the management. One is Diligenta. Secondly, geographies like Latin America and Japan, where there was a $20 million miss the previous quarter, and telecom as well as energy. So we want to see improvement in all these three headwinds. Also, attrition for TCS, while it's lower than that of many peers, has been inching up for the last 6 quarters. So some commentary on that will be keenly awaited. And even as the analysts believe in the longer term story of TCS, considering its performance has faltered in the last few quarters, we want to see an inline or a beat from TCS, for the stock to perform from here on. But after Infosys not raising its guidance in F5, at least for F516, it's raised a shadow for the second half of the year. And even the management commentary suggested that retail could be a bit subdued. They are facing some client-specific issues. So demand commentary will be important. Back to you.
All right, Rima, thanks for that. So that is the background on which TCS will be going into its numbers. Sudeep, coming on that, TCS has delivered numbers below expectations for the last 4 quarters. Do you think another disappointment is on the cards tomorrow?
Well, I think, the way things are positioned, the expectations from TCS are not as high as Infosys. So I think there is a possibility of not being disappointed too much, because market already is factoring in probably a weak second half for the IT companies, large IT companies. Any improvement, any suggestion from TCS that the second half is going to be better or equally good compared to first half may enthuse the market. We'll of course have to very keenly watch what happens as far as the laggard geographies like Latin America and Japan. We'll also have to see some of the verticals which has not been performing in case of TCS, like telecom, what's happening there. We'll have to keep an eye on the attrition numbers. But overall, I think because the expectations are lower from TCS this quarter, there is a less chance of disappointment.
Okay, by the way, the market has recovered a bit from the low point. The mid-cap index is almost in the green. And for the Nifty, the stock that's really leading minor recovery, that is from 8130 to 8150, is Hindustan Unilever. Pull out the intraday chart of HUL, and that's a stock that's now actually trading at high point of the day. It was in the red, but has now broken into the green, and by quite a margin. HUL is the stock that we're talking about. Let's pull out the intraday chart. As you can see, there's a sharp uptick that you're seeing on that particular stock. So looking quite good at this point in time. Sudeep, from these levels, do you think IT can still provide leadership, or will the market have to now look elsewhere for leadership?
Well, I think IT can provide leadership, but Anuj, it has to be selectively. It will not be all IT companies. As we have been saying for some time, the new areas which will be the leaders. The animation, the mobile technology, the new emerging digital areas. I think companies having competence and companies gaining market share in these areas will be the leaders of the future. Out of Indian IT companies, there are enough and more competencies. So yes, there is still an opportunity for IT to provide leadership. Of course, the currency factor has to be, favorable. If the currency factor is not favorable, overall scheme of things, I think IT companies will suffer. But otherwise, considering that the Indian rupee will remain stable or depreciate from current levels, IT has the potential to provide leadership.
Okay, so IT does have the potential to provide leadership. Mayuresh, the other stock that you had picked out for us is Ultratech Cement. Just take us through your rationale behind why you like it. The reason I'm asking is the last 3 months have been extremely choppy for the stock. In fact, it's come off from the 3,350 levels and now trading at just 2,850. Why do you like that?
So clearly, Sonia, I think the earnings disappointment will still continue to a lot of cement companies, including Ultratech. So I think the margin expansion you probably saw in the last quarter at 18.5%, that might just get tapered down, and that was more to do with how the petcoke consumption actually panned out in favor of Ultratech. Having said that, I think the utilization levels across the industry still seemingly are low, between the 70-75% mark, which is getting a dent on the return ratios. But clearly, I think the monsoon season is out, and though Q2 might be a little bit weak in terms of port dispatches, top line realization, as well as bottom line growth, and again on an EBITDA to ton basis, both on an operating level, our take is that it might just be subdued this time. But the larger picture probably is that utilization levels going up, the spending going up on the government side, and clearly I think that will benefit larger players like Ultratech. The capacity expansion that is taking place in the east, in the north by 2.9 MTPA, 3.6 MTPA respectively, and taking along Jay Prakash's assets as well, I think the increased capacity will be around 71.2 MTPA, and clearly I think on that base itself, I think the operating benefits will be huge. So top line growth of 18%, bottom line growth in excess of 27-28%. I think Ultratech looks decent deploys. The premium valuation that it probably derives, I think, should sustain. So any decline over the next month or so onto the stock post results, I think, should be seen as an opportunity for long-term investors.
Okay, Mayuresh, hold that thought. Just about 2 minutes left for market to close. So let's do a closing recap. Well, the market not quite closing at low point of the day, but it was a disappointing day. And what's really going to be interesting would be the delivery number in Infosys. You're likely to see a delivery-based sell number of at least 1,000 crores. It could be more than 1,000. It could be even 1,100 or 1,200 crores of delivery-based selling that you'll see in Infosys tomorrow. Not 300, 400 crore, at least 1,000 crore. More than that. The stock is down about 4% as we speak. Was easily your stock of the day. Apart from that, the stocks that put pressure on the market, the entire pharma pack, Sun Pharma, Cipla, Dr. Reddy's, they were all lower by about close to 2%. Lupin as well, in fact, was down about 2%. The other news-based stock was Bank of Baroda, though that actually ended quite off the low point of the day, but still down about 3.5%. TCS was also down today, 1.2% lower, ahead of its numbers, in sympathy with what happened with Infosys. Maruti was the other notable loser, down about 1% in trade today. ITC was down about 1% as well. So these were some prominent losers in today's trade. You could add HDFC Bank and Axis Bank as well. Commodity is still gained in trade, even though they came off the high point in last hour of trade. But Vedanta was still the top gainer, up about 7%. Intraday it was up 12%, but ended 7% higher. Hindalco was up 4.5%, and GAIL was up 2.5%. Tata Motors was the other notable winner. In fact, Tata Motors this month is now up 22%. So big gains in Tata Motors. Larsen and Toubro as well was higher by about 0.5%. Low volume trade, only 14,000 crore done, and the large part of that was actually in IT stocks. In the mid caps, though, it was mixed trend, though to be fair, it wasn't as bad as it could have been.
Oh yes, but overall it was a flat day for the mid-cap index. So the headline index did not move much at all. Yes, there were plenty of stocks that moved around because of news-based stories. The one of the stocks of the day was Zensar. That stock was up 16.5% and volumes higher than what it trades on an average basis. So Zensar up about 16% there. Then you had Dishman Pharma, that has been one of the big gainers this month from the pharmaceutical space. Dishman Pharma up almost about 6% or so. It should also be up on your screen in a bit. Motherson Sumi had a good run today after UBS came out with a report where they said that the earnings of the company will double in the next 3 years. So Motherson up about 5.5%. Nalco as well had a strong run today. Nalco up almost about 4 to 5%. And one of the big stocks, that moved this year has been something like Advanta. It's up almost about 70% this year, and today the stock went up by 5.5%. Advanta is the stock I'm talking about. It's now at 600 rupees. So overall, not a bad showing for the mid-cap index, but yes, for the frontliners, it was Infosys that dragged the markets lower. And apart from that, you had other casualties like Bank of Baroda and Lupin as well, down about 1 to 3%. But let's continue our chat with our guests. Sudarshan, we've closed below that 8150 mark on the Nifty. What is the strategy that you're recommending for tomorrow? And also, if you had to identify 2 or 3 stocks to trade early morning tomorrow, what would they be?
Well, for the Nifty, the strategy is so easy now. Don't do anything. The Nifty has broken down from a support level, even though it was momentary. But there is no trade now. Again, a new trading range is developing between 8100 and 8200. So let the Nifty take out this range decisively, cross 8200 and close above it, or stay above it for a few hours. go below 8100 and then say, okay, I'm not coming back again. So between this 100-point range, it's far better to stay away from the Nifty, and that would apply a little less, but it would still apply for the Bank Nifty, which is more or less following the Nifty. That's the broad view on the indices. There's a lot of possibility that the IT sell-off that we saw today could continue tomorrow. So while they are all big names, you have to look at the market in the morning, and the two sectors that have held on the rally, IT and pharma, could become opportunities for day trading on the short side tomorrow.
Okay, Sudeep, Tata Motors, it's rallied about what, 25% from the lows. Is it still offering good risk reward for you? Would you still buy Tata Motors, or would you wait for a correction now?
Well, I think, Anuj, I will wait for a correction. I think overall the China situation has to improve significantly before there is a decisive view on Tata Motors can be taken. All said and done, the company today is greatly dependent on China for delivering those JLR numbers. Yes, in US there has been a positive momentum as far as demand is concerned. There is talk of vehicle demand, commercial vehicle demand going up in India, but company still is to a great extent dependent on China. If and when there is a decisive move on China towards the growth coming back, I think Tata Motor will be a buy candidate, but not yet.
Okay, not yet a buy candidate. Apart from TCS, tomorrow we also have DCB Bank that comes out with its numbers. And remember, last quarter, DCB Bank had a very slow quarter with an NII growth of just 1% and profit growth of 5%. So in 3 months, it hasn't moved much at all. Everyone is waiting for this quarter to see whether last quarter was an aberration or whether this slowdown continues. Mayuresh, how do you approach DCB Bank now?
So as a disclaimer, we don't cover that. So I think we'll still prefer the other larger private sector banks like an Axis, ICICI, Yes Bank. I think the earnings profile there is much in a more structural, granular state. And again, I think if you look at their core profiles, I think the earnings growth for all these banks should be quite stupendous over the next few quarters. So I think the larger private sector banks is something that we'll still lay our bets on. Axis, ICICI, Yes.
Mayuresh, what about a stock like Motherson Sumi after the kind of move that we have seen?
So clearly, again, I think I'll wait for results to come through, and it's not just about results. I think structurally on the order book side, the story still remains very, very strong. Utilization levels across its plants have been extremely robust, and if one sees into the Volkswagen issue, I think one really needs to understand from the management how deep the issue can be in terms of earnings hit that Motherson Sumi can take. Having said that, I think even on the domestic side of business, as I've repeated time and again, I think it has seen issues related to copper prices, discounting levels. And again, the rupee depreciation probably just takes a toll probably on line by line item on the P&L. So I think wait for the numbers to come through. I think I'll not be rushing into the stock. Let's see how the numbers pan out, what the management commentary is, and then we'll probably take a call on the stock.
Okay, gentlemen, we'll leave it at that. Thanks for joining us and taking us through the last 1 hour of trade. It has been a bit disappointing for the market. So the start to the week has not been good. The start to earnings season has not been that great. So there's a bit of a setback that the Nifty saw today below that 8150 mark. But we'll take a break. Up next, we travel into the interiors of Marathwada with